Welcome to Animal Spirits with Michael and Ben. So Airbnb filed their S1 a few weeks ago. This thing was almost 400 pages long.
Don't you think it's impressive how many companies have been able to go public during the pandemic? Like the whole roadshow thing just didn't really matter that much.
Yeah.
By the way, what does S1 stand for?
Safety first.
Someone can tell us. Okay.
So this is one of the things that I pulled out that I thought was the most important point. In more than 220 countries and regions around the world, our hosts have welcomed over 825 million guest arrivals and have cumulatively earned over $110 billion.
Okay, I wanted to read you a headline from April 2020. Airbnb is reportedly paying a steep 10% interest rate on the debt it just raised in its $1 billion funding, and its valuation is nearly half of what it was in 2017. That feels like something from 10 years ago.
So,
there was
ostensibly, they're going to use a lot of these proceeds to retire some of that debt?
I would imagine. There was a time when, I don't know, a 3-week period when we had the stay-at-home orders and quarantine where there were stories in the Wall Street Journal about people who own 10 houses that use them on Airbnb being just completely screwed, and that the company is done. I mean, that changed pretty quickly once you realized that, okay, people would rather stay in an Airbnb than a hotel. But for, I don't know, 3 or 4 weeks there, the prospects for this company looked pretty bad.
I remember very vividly us talking about the fact, can you imagine being an Airbnb employee, having been there, for several years at this point, preparing for this day, for your liquidity moment. And again, saying that out loud, I know there are much greater tragedies in the world than what was going on at the time. But just, imagine being that person and then all of a sudden that being ripped away from you. And now it's back. And not only is it back, boy, is it back. What did the stock pop? 150%?
It was up here. Yeah, it was well over 100% the first day that it opened. So I think it was, and they raised the price a few times before going into it. And it priced at 140, 150 the first day or something. And it was supposed to be 68, I think. So
I will say this is the busiest our doc has been in a while on a very concentrated topic. So let's get right into it. From the Wall Street Journal, so far in 2020, well over $140 billion has been raised on U.S. exchanges, far exceeding the full year record of $107 billion set at the height of the dot-com bubble in 1999.
Remember a few years ago when IPOs were dead? And that was it?
They kind of were. We went through a lull.
So this is from Axios. IPO investors have made more than $50 billion this year just by being allocated to stocks and holding them for a single day.
If you annualize that overnight,
it's not bad. So obviously they said that's an new annual record and the year's not over yet. So that's basically, if you're a retail investor on Robinhood, you're not getting the IPO price of any of these companies. You're not getting DoorDash at what an IPO is at or Airbnb. You have to get it through your broker and have some sort of relationship and have those shares allocated to you. So this is how brokers make their money, by having that relationship. And this is typically how it works. We've talked about this guy before, Jay Ritter, who was a professor at the University of Florida, and he went back and did IPOs. The numbers are a little stale, but it probably holds up. So he looked at 1980 to 2015. And he looked at the opening day, first day return for all these different IPOs at different price ranges, from 0 all the way up to 500 million and then above $1 billion. And the average first day return for these IPOs was 18%. And then he market adjusted it, basically comparing it to the market over the next 3 years. And then they underperformed by 18%. So taking away that first day pop, and if you don't get allocated the shares, you don't receive that. That was all the outperformance that these companies had, and then they slowly gave it all back.
And that was a big topic this week, was who deserves that pop? Is it the brokers and their clients, the bankers, the underwriters? Is it the VCs? Who is it exactly? So 19 IPOs doubled on the first day in 2020. By far, the highest that we've seen since the turn of the century. And people are saying, is this what 99 felt like? I wasn't there in 1999. I was 14. Ben, you were 30.
I was a senior in high school.
Okay. So
I had no idea what the stock market was at that point.
Right. But wasn't this every day in 1990? Now, granted, the size of the deals were much smaller, but it was a party every day for years.
So in 99, it was 117 that doubled on the first day. 2000 was 78, which is pretty crazy because that was probably the first 3 months of the year. So 19 is high compared to the last 10 years, but not high. There's a lot of similarities and differences between 1999 and now. Here's the one difference. How about this? This is my only thesis. In 1999, you didn't have people screaming, "Is this 1999 again?" Right? That isn't that the one difference that kind of so here's here's where people are pulling back a little. So there was a story that, how do you say it, Roblox, which is the video game, and then Affirm is a company we've talked about that, we're both Affirm users, I think, for our Pelotons, right?
Yep.
The 0% interest place. They said they're postponing their IPOs now because they're seeing these huge first-day pops. Maybe I'm a total noob, and I am a total noob on this, but why don't they just raise the prices and get more, or have more of their stock put out for sale and raise more money?
I'm guessing that's exactly what's happening. They're just trying to recalibrate what they're offering and what the price should be. So
they did say in this story from Wall Street Journal, they're considering selling a larger proportion of their shares, or maybe a different changing the mix of stocks, like how they allocate it. But they're worried that they're going to put it out there. It's going to have 100% pop the first day, and they're not going to get as much money as they want or need or should get somehow.
So Airbnb opened at 146. It was the biggest day one pop ever for an IPO that raised over $1 billion. And Bloomberg said, quote, a Bloomberg article, had the shares priced closer to where they started trading at 146 instead of 68 apiece, Airbnb could have raised $4 billion more for the company and early investors, end quote. And this is what Bill Gurley's been raving about. But A16Z did a really good piece in defense of the IPO, and it's basically a supply and demand issue. The fact that Airbnb left $4 billion on the table, it's just not really true. And by the way, you saw that video of the CEO Brian Chesky finding out
yes.
on air.
He was speechless.
What do you think about that number and the potential that you're leaving billions of dollars on the table?
That's the first time I've heard that number. When we, in April, we raised money, and it was a debt financing. That price would have priced us around $30. So I don't know what else to say. I'm very humbled by it.
But this is a supply and demand issue. So yes, there was a huge pop the next day, but these are just small, tiny like minnows that are piling on. It's like a piranha devouring a big fish. If you gave the piranhas a blue whale, it would look different. So if you flood the market with all of the supply, they're not going to be able to get the same price as the day one pop.
And guess what? The Airbnb owners still own the majority of the company, right? So this is still good for them because it's priced higher.
Well, it's good for them, but it's not. I guess it's not good for the VCs. They're not getting as good a deal as they possibly could.
Right, which is kind of funny because for years, people were saying the private markets are completely detached from reality and they're overvalued, and now they come public, and then it looks like the private markets were undervalued, I guess.
Well, now that being said, I think everybody was talking about a gigantic day one pop for Airbnb. So in defense of, not that Bill Gurley needs our defense, but why wasn't it priced higher?
Yeah, I don't. Honestly, this is one area where like the IPO leaving money on the table versus doing a direct listing, I have no strong opinion one way or the other. This is first world problems, and I just don't have a strong opinion to care. I know a lot of people really care about this. For me, this is first world problems, and I think anyone who gets this much money and their stock pops is going to be fine either way.
For sure.
How about that?
I guess the point is like that A16Z was saying in their piece was that no, Airbnb cannot have prices at 146 because if that was the price, they probably wouldn't have had buyers at that size. That's the thing. It's a supply and demand thing.
Right. They almost need the pop to get the people to come in up front because they're fronting the money to get that return. It's a weird thing. How about this? So Airbnb and DoorDash were the two big ones.
By the way, DoorDash, sorry, but it seems like everybody's on the same side of DoorDash that it's not a viable business model. It doesn't really make sense. And yet the stock was up, 85% on day one?
I mean, I've seen a few of the VC Twitter people basically say, you're not understanding this well. They're going to take that last mile and then it's not just food delivery. They're going to deliver everything to that last mile to people.
They better.
They're going to be the delivery. So this is the one where if I'm doing my paper trading account, I'm long Airbnb and short DoorDash if it's these two stocks.
Revenue at DoorDash was up 268% in the third quarter. Assuming that's maybe not as good as it's going to get, but they're never going to see a revenue jump like that again in terms of percentage, right?
That would make sense. Yeah, this was another pull forward. And
by the way, how about SoftBank with a giant win?
Oh, do they own DoorDash?
They're the largest shareholder, 20% stake.
Okay. See, all those PowerPoint presentations they made were worthwhile. This is one of those things where me personally, my adoption of this is probably holding me back to see if this was a viable business. Doesn't it just seem like anytime you get delivery food, you pay way more money?
I'm out on DoorDash. we spoke about this months ago, but I almost use it again, and it's just too expensive.
Yes, I agree. And the menu prices are more expensive too. Not only paying all these fees on top of fees. By the way, how many dad jokes were there on Twitter of people saying the price of DoorDash and Airbnb also includes these 10 different fees? If you're big into dad jokes and you didn't make that one, you missed your opportunity.
So Galloway did a piece, a lot of charts, a lot of good charts about Airbnb. He showed the traffic to U.S. website traffic, I should say, to Marriott, Hilton, Hyatt, Intercontinental, and Airbnb. And Airbnb is just way, way, way above the others. Not only is Airbnb huge, but they're global, and they're huge globally. So he looked at search volume in London, New York City, Sydney, Tokyo, and Orlando, and Airbnb just dwarfs all of their competitors. There
was a lot of people making the comparison, and I think maybe you did this with DoorDash. DoorDash is now worth more than XYZ company in the same
that's hard to defend.
Airbnb.
I think Airbnb kind of makes sense. You could wrap your arms around that.
That's what I'm saying. Airbnb makes sense, and this is one that I would have loved to get into this. I wanted to buy this. I wanted to get this at a lower price. So if Airbnb now falls 20% after seeing that pop, I say that's a good thing.
Well, and it's Monday morning. No, I'm sorry. It's Monday afternoon, and I did my second purchase. So I'm now, not to brag, I'm sitting on 10 whole shares of Airbnb.
I bought a little of my Robinhood account too. I would love to see it fall further. But this to me, Airbnb is not a sign of excess to me. There are other signs of excess out there, but Airbnb is, and I think that's another difference between 99 and now is, here's the way that I think, because markets are speeding up so much, investors are able to look at these like recurring revenue sources and all these things, and instead of waiting around, they've seen a company like Amazon take forever to then grow into its price, and then the price, those people were talking about valuations of Amazon in 2012 and 2013 being ridiculous, and they saw it grow into it, and it didn't matter. So now I think investors are saying, okay, we've got a use case here for when we don't need to worry about fundamentals now, and the company will grow into those fundamentals. So I think investors are just saying, screw it. Let's price them all now like they're going to grow into it.
Yeah, so
and
you're saying
some of them will work and a lot of them won't.
You're saying investors have seen this movie before and they know how it ends, except in the case where they wait 20 years and they see Top Gun and then it's a big disappointment and then it gets re-rated.
You just wait. Top Gun 2 is going to be the best movie of 2021.
I am excited for that. So Aswa Damodaran did a blog post trying to value Airbnb. This is pre-IPO. So I don't know, I guess it was like 2 weeks ago. And the way that he shook out was $54 per share. In his most ambitious, by the way, the stock is at, I don't know, 130 right now or something. In his most ambitious scenario in terms of margin expansion and gross booking, he got to $66. So this is what he wrote. He wrote 5 bullet points on how investors should think about the IPO. If the equity is priced at under $28 billion, it's a bargain. Between 28 and 33 billion, it's a solid buy. Between 33 and 38 billion, a fair value. Between 38 and 44 billion, too richly priced. Over 44 billion, overvalued. And what did this thing what was its first tick? 100 billion?
Honestly, yeah. Again, this is people pulling forward and saying, you know what? I'm not going to wait this time. I'm just going to overprice it now. And if it grows into that stuff, great. I think that's what's happening. And again, there's going to be the shakeout where I think it's going to be great to see these earnings days for these. If they miss their earnings by just a smidge, whatever their expectations are, you're going to see some like 20 or 30% drops in these stocks.
Well,
like that.
DoorDash's revenue their growth is already slowing down.
But if they beat expectations a little bit,
sure.
They're going to have, so I think the volatility in these stocks is going to be enormous.
Agreed. They can beat and still get killed.
Yes, that too, if it's not quite as high as people want it to be. But I still think out of all these, the one with the best opportunity to grow into a massive company is Airbnb.
I agree.
Even if it's overpriced now, I still think that has the possibility, just in my mind, of a company that could get to that upper echelon someday.
I agree. Okay, so Jamie Catherwood did a post from this weekend, and so Jamie does this great stuff with financial history. By the way, subscribe if you're a fan of financial history. Jamie does this course.
Investor Amnesia.
Yeah, so Jamie has this course I will link to, which is really incredible. He's got people like Jim Chanos talking about the history of Enron and all this sort of stuff for only $100. So that's a good one. All right, so Jamie pulled this from 1922. Quote, as a rule, when stocks are first listed, they sell much higher than they do a short time afterwards. It is more likely to be true when a stock is listed during a very active market, when prices are most easily influenced by publicity. As soon as the effect of this publicity wears off, the market price of the stock declines. So don't you think that Robinhood had to have been an influence here?
Sure. The speculative nature of this bull market. It's funny because people try to debate, is it low interest rates that are causing this? Or I think it's just the longer you get in terms of a cycle in speculation. And let's say, I don't think that this is semantics here, but that 4-week bear market we had, I think we're still on the same trajectory. I think we're still part of the same cycle. I'm now in the camp of bull market never ended. We've been going at this for so long, and especially the tech bull market, if you want to say that, technology has been strong since, 2010. It's just the further along you get, the more accustomed people be to big gains, and they just keep looking for more and more places to get those gains from. So again, that's why the speculation just speeds up.
Max Gokman, head of asset allocation at Pacific Life Fund Advisors, said, "It seems like a stretch to say that fractional share programs arriving at major retail brokerages and IPOs going stratospheric at the open is just a coincidence," end quote. I forget what, maybe this was from the Bloomberg article. They said scarcity played a major role in the rallies. DoorDash sold only about 10% of its shares. Airbnb sold even less, about 8%. So
I can't believe that Robinhood is not hopping into this IPO pool yet. It's got to be coming.
You would think.
Can you imagine the memes that are going to happen when Robinhood traders are trading Robinhood on Robinhood? Come on.
Do you think so? Last week I was thinking, maybe I'll write something about this. I was thinking that greed is more powerful than fear, because rewind to March, everybody is in it together, and misery loves company is the old saying, right? We're all in this together. But when you see greed, I don't really care who you are, like how rich you are. When you see somebody making more money than you, that is a different part of your brain that is triggered altogether.
Especially when you view that person as inferior to you in terms of intellect. Because there's a lot of smart people who have missed this, who've got to be saying, like, I'm not going to let that dummy beat me. They're the ones who've been in and they're making all this money on Robinhood or whatever. And it almost doesn't matter how much money they have. It's just like that they see it in percentage gains too, right?
Yes. And to this point, last week we were saying, like, what ends this? And the answer is supply. So there's going to be some really, really bad ones coming. Carl Quintanilla tweeted this morning, Goldman said that $61 billion in SPAC IPO proceeds is currently searching for acquisition targets. $61 billion. Based on their 24-month post-IPO expiration dates, these SPACs will need to acquire a target in 2021 or 22, nearly equal to the total enterprise value of SPAC deals closures during the last decade. Okay, there's going to be some really, really bad ones. So I'm
this
just
is
saying,
the dry powder, and these places, they're going to be forced to make a deal.
Yes, and there's going to be some really, really, really horrible ones.
Right, that they're going to massively overpay for, plus they're getting the fees on this stuff. And
I mean, we're going to see some serious garbage. Supply will soak demand, and that's how this thing might eventually end. Modest Proposal tweeted, there was a debate in 2015 about if a basket of late-stage private cos were a bubble or just expensive, but they appeared rich versus public markets. When did Alibaba IPO? Probably around then.
Remember that was the top at one point.
That was the top for sure. Yeah, everyone said so. Today it is flipped, and late-stage private markets are apparently at a discount to public markets, which means more supply cometh. And yes, it will.
Yeah. And good luck trying to predict the end of this, right? Whether this is a bubble or not, whether there's companies that are going to work or not, trying to guess how far the pendulum will swing on this stuff is impossible. People have been, I tweeted this morning, I sent you some articles. I found an article going all the way back to 2012 that said when Facebook IPO'd, we're in a huge new tech bubble. And then I found one from 2013 and 2014 and 2015. People have been calling this a bubble forever. And I do think we're conditioned for that, because how many people read The Big Short and thought, I'm calling the next one? So we've had so many people top tick, and almost that's like kept a little bit of a cap on it. But you're right. Once the supply comes, then it's whatever. It's game over probably, and things go to the moon.
I've shared this post in the past many times, and it really is my favorite description of a bull market. I just think it just nails it. So Adam Smith, the pseudonymous Adam Smith, wrote this book, one of my favorite books ever, actually. He wrote The Money Game. The Money Game is one of the best books ever. He wrote another book a few years later that was not quite as good, but it has one of the best quotes ever. He said, "We are all at a wonderful ball where the champagne sparkles in every glass and soft laughter falls upon the summer air. We know by the rules that at some moment the Black Horseman will come, shattering through the great terrace doors, wreaking vengeance and scattering the survivors. Those who leave early are saved, but the ball is so splendid no one wants to leave while there is still time, so that everyone keeps asking, what time is it? What time is it? But none of the clocks have any hands," end quote. And I've shared that many times, so you've probably seen some version of it. But is that not just the best?
That's pretty good.
Because it's true. It's so easy to say this doesn't make sense, but people have been saying it for years and years and years. We have no idea when and how this ends.
That's one of the reasons that almost too much historical information about the markets can be a detriment to you, because if you look and say the dot-com bubble crashed in the early 2000s, the real estate bubble crashed at the end of the 2008, and you see all these things and you just want so bad to be the top caller the next time around. So you could have been one of these people who's been doing this for 8 years now, and now guess what? No one's going to listen to you anymore because you've been saying it for so long. But so that's why, just even if you know for certain these things are overpriced, good luck on the timing. And the timing is the only thing that matters, right? Ask everyone who predicted Tesla was a zero 4 years ago.
And by the way, the notion that this ends, it doesn't end. Nothing. What do you mean it ends? When does the stock market end? It ends when you die. It never ends.